Hi everyone, and welcome to Exchange Insights, your resource for 1031 market intelligence and education. My name is Tom Wall, partner here at Anchor 1031. Really appreciate you joining us for our third video in the series Managing Debt in a DST Portfolio. Today we're going to be diving into an important topic that I think every investor should be familiar with: cross-collateralized loans. I think you're going to find this very useful, and it's my personal favorite in the series. I really wanted to bring this topic up because many investors are attracted to the idea of diversifying their investment across a portfolio of properties, whether it's through an LLC, Delaware Statutory Trusts, or in a REIT. No matter the structure or type of investment or asset class, whether it's stocks or bonds or mutual funds or real estate, of course, diversification is the key to a healthy portfolio. Now, if we're talking about a portfolio of real estate, it's really important to understand the financing behind how these properties are grouped together. So if these properties are financed with a loan that is cross-collateralized, your investment might not be as diversified as you think. So what is cross-collateralization? Simply put, it's a strategy where multiple properties are used as collateral for one single loan. That means that the performance of one property in a portfolio can have an outsized effect on the overall return in that portfolio. To put it in simple terms and bring this to reality, imagine you've invested in a fund that owns 10 different properties. If just one of those 10 properties or a small part of that fund starts to underperform, the bank could potentially hold on to the revenue. If just one of those properties or even a small part of that fund starts to underperform, the bank could potentially hold on to the revenue from the entire portfolio until that struggling single property begins to recover. And this could happen even if the other 9 properties in that fund are performing exceptionally well. If one property fails, the others might be exposed to additional foreclosure risk as well. They're all under the same loan. Now, this isn't necessarily bad. It's just another nuance of investing in real estate syndications, and often cross-collateralizing your loan gets you lower interest rates and therefore higher cash flow. The key is understanding how the loan works, what risks it presents, and what the sponsor does to mitigate those risks. Like I mentioned, asset managers are often going to use cross-collateralization because it's going to help them secure more favorable loan terms. They pool properties together and they can access larger loans. They can increase the upside potential and help achieve economies of scale, leading to better overall performance. I'm not suggesting that investors should avoid portfolios with cross-collateralized loans altogether. If that were the case, most large portfolios would be off the table. I just want to bring this to your attention because it can be an important factor when evaluating one DST strategy against another when constructing your portfolio. For example, if you're an investor who really values diversification, you might want to diversify your investments across a portfolio of multiple DSTs rather than concentrating your wealth in one single DST that owns many cross-collateralized properties. So to recap, in simple terms, a cross-collateralized loan means that a portfolio of properties can be affected by the poor performance of just one of those properties. So that's how cross-collateralization works and its potential impact on your portfolio. Just want to bring this to your attention so that you can better assess your diversification strategy and consider diversifying across DSTs and not just one DST that owns multiple properties. Thanks so much for tuning in today. Next time, we're going to be covering the details of the long-term financing that we see on DSTs and the risk factors involved. My name is Tom Wall. I really hope you found this video helpful. If you'd like to discover more educational resources or schedule a call with myself or my team, please sign up at anchor1031.com and we'll get you sorted. Thanks so much. Talk to you soon.